Guess my mic was off. Sorry about that. So my analysis is bearish for gold today. With my top-down analysis earlier on in the morning during London session, I had a sell limit placed exactly here. I was hoping to ride the trend down from here to the swing low. I believe this was my first potential trade of the day, which eventually did not get filled in. Yeah. Yes, my mic was off. Now we're waiting for this setup for the New York session, but we have been having a very choppy morning due to Iran war. NFP has been moved to next week. The tension between Iran and the US. The 4-hour chart looks also choppy. I cannot see serious momentum to any direction, especially to the downside. So let's see. So if I were to buy this market, I would look for an area way down here. So if we were to go back to this price action here, we have a fair value gap resting below here. Now the only valid area I could really look at as our potential area to actually take a trade is this volume imbalance here. This gap created by price. I believe this was on Monday. That wasn't filled. So it's still a little bit far-fetched. If I'm to be sincere, it's a little bit far-fetched, you know. But all of this is liquidity, and anyway, this is gold. Anything can happen. So where price has now reached. And delete this. I've used that already. So this can't be a valid order block because it has already tapped into psychological level of price. So should be run to. Fair value, this fair value gap, don't think it can hold price. Really, it has nothing of any value to price unless it's just used as a minor area to support price to go higher. Yeah, so far this is all we have. This area around 4,680. Yeah. So I'm still very much bearish on the gold market for now. What happens with trading limit orders is you easily miss the move if price doesn't actually reach where you expect it to. Maybe it actually did. Let me see. Let me look at gold futures. Might be speaking and it actually did it. And the inefficiency is also open here. So it didn't actually reach there. Because this is the same fair value gap I marked out on the gold chart from Rwanda. And now this is the order block I've marked out currently. And it's crazy how after all this rainfall news was released from the euro, from the US, nothing really happened. The gold market has been choppy. Maybe it's because we have Trump speaking tomorrow. Trump has a speech tomorrow. It could be a valid reason, but other than that, there is nothing much significant to really think about. Nothing very significant, really. DXY looks a little bit. I prefer looking at the daily chart of the DXY. So, bullish. Daily chart bullish. Yeah, today, most likely following that. Yeah, nothing much really there. Nothing much to talk about. So we look a little bit bullish here as well. Okay. As gold left us again today, really no volatility in the market, no entry for us. Is this so? Oh, wow. Oh, the funded accounts are really crying right now. Yeah. The pain of missing out on trades. There was no fear of missing out, there was just missing out for me today. Yeah. There was just missing out today. Though, I think yesterday was also a very interesting day for me when it came to trading these markets because I took buys, then the market dumped eventually. So I took buys. Where did I take buys from? This is yesterday's price action, yes. So they were almost at the same prices, if I'm not mistaken. One trade wicked me out. Oh yeah, I think it's this one. Yes, I took two setups here. Two long positions. One was another buy limit that was here. I was wicked out of that one. Yes. If it if I wasn't wicked out, that was a good 300 pips for me on three different positions. I would have collected about, let's say, 450 pips. Yeah. Then the second entry was a beautiful week entry, which I used around the same price. Um, I used yesterday. That was a beautiful trade. Hit full TP and price just decided to dump eventually. Yeah, I couldn't enter. I didn't see any reason to sell because I didn't see anything in my strategy that would lead me to changing my bias from bullish. The only thing that I had in mind was price coming all the way up here into this order block and dropping. But then, after doing my analysis later on, I realized this order block actually held price from continuing higher. And if my bias was bearish, I would have sold from here if I had that bearish bias earlier. This would have been my sell setup, and I would ride the last position to somewhere around here, maybe. I would say, yeah. So anyway, now fast forward today, uh, gold doesn't look like it wants to favor us with any opportunity at the moment. With a new Fed chair, Kevin Walsh replacing Jerome Powell, I believe things are looking a little bit frisky for the Forex market. Oh, oh yeah. So this was a buy position. No, I'm learning something new actually today when it comes to this order blocks. This was Asian session. Oh, yeah. No wonder I didn't see anything significant. So Tuesday's New York session, I think I got a trade. I got a trade there. Um, if I'm not mistaken, did I? Or I skipped it. I think I skipped Tuesday. Not that I received enough losses to forget them. Yeah, so Monday I got, oh yeah, Tuesday I got a trade. Tuesday I got a trade. Tuesday I sold. I sold from here. I remember I was taking a walk and I hit TP. Yeah, I sold around 4,986. My TP was, the final TP was at this liquidity. Then price reversed on me. Yeah, I remember. Tuesday I only took one trade, not two. Though I wanted to buy London in the morning um, from this fair value up here. I wanted to buy, actually not, I think it's this order block that I wanted to actually take a setup from. Question is, would I have actually made money because I see my stop would have been hit. I use a constant stop. Oh, I would have survived the stop out. So my stops are normally 150 pips for my stop losses. I always target a 1 to 2 for my second TP. Yeah, I think I would have been stopped out for the last position. Then as goes my way. Eventually, I still would have made at least 1% of my account. Yeah, so back to this. We are now in this range. Wow. We're now ranging between here. So arranging here now. Whoa, this is something. So gold always does this. Will consolidate during New York. Asian session will open up and will fly in either direction, bullish, bearish, name it. And then London, we sell, we short maybe, or long, depending on what Asia does. But I'm still positive that this fair value gap is going to actually do something. Though I haven't left, I closed the orders because we're now in a new session. But tomorrow, um, when if tomorrow finds this area not tampered with, I'd love to see price come back here. I would expect actually price to come back here and we sell off clearly, intentionally speaking. By the way, yeah, intentionally speaking. So yeah, let's wait and see. It's all about patience. The day is not done. Price is just playing around. Let's talk about psychology and what it does to us. Like, seriously. Well, it's been a long journey to get to a point where I'm actually calm when looking at trade or looking at the chart. I've always been in positions where trading is like a war in my mind. I'm just fighting to hold on, fighting to survive myself. Well, that was because I had no strategy. The moment I got to the strategy, everything else aligned and became easier. Yeah, because it's hard. It's really difficult to come to the market and know that you have no chance. And I've done that so many times. And so has every other newbie trader and even professional ones up to now. Because you have to start from somewhere, right? Yeah. And accepting losses is another thing that actually got me to this point and made me understand that it's not about how how good you are at winning, but how good you are at losing. I lost so many trades. I've lost so much money learning this skill. Right now, I'm hanging on to a couple of prop farm accounts that I'm using the same strategy I'm showing you. I've not taught anyone this particular strategy. It's it's something I discovered a few months back on GBP USD about time and price and how they align with PDRAs and all that, and which particular PDRAs to actually pay attention to, and which ones to ignore, and when to actually pay attention to them. Yeah, so there's a level of hierarchy for these things, and it has given me a little more clarity when it comes to trading. Yes, and I use the 10 minute chart actually. I don't need the 1 minute. I was trying to figure out a certain scalping strategy on the 1 minute chart, but it's a little bit too much work for me now. So it's crazy how you look at the chart now. There's the reason as to why my chart is green and black is because I don't like color red. That was the first psychological barrier that I had. Okay, it doesn't matter the color of your chart, but to me, on a personal basis, it really doesn't make me comfortable when I see the chart green, then when you're going down, it's red. So I made it green and black for more comfort. And yeah, it has helped with my psychology. And I prefer looking at this chart as well to give me higher time frame a picture of what the higher time frame is doing. Because I used the 4 hour, then I skip the 1 hour and every other hour in the middle, go down to the 10 minute and actually find my trades. I don't use the 1 hour chart anymore. Um, I mastered doing top down analysis without actually going down through every time frame that I meet 15 minutes, 30 minutes. Nah, it's not necessary anymore. So here we are with gold. So if I'm to reasons why, let me turn this into a file. Should I or I just leave this? And let's look at this. Where is that button? Anyway, let's just do this. So if I extend this is our 4 hour chart, right? So normally, if we are to see price do something, normally I would have candles printing this way. Let's say we are bearish. Let me give this. Oh, there we go. So let's say we are bearish. We're bearish like this, like so. Price is trading lower. This is our assumption. Yeah. And I should make this bigger. It actually look like a candle. Clone this. Okay. Drawing things here is not easy. There we go. So let's say we're bearish, yeah? So the fact that price closes below this low here confirms that we are still bearish. So what I would expect is price to open, the new candle to open, maybe manipulate, and then continue lower. This is what I would be expecting. But if you see price doing something of this sort, like the body doesn't close below, even if this week is all the way here, this is more of price is just ranging. Why? Because we are looking at this low. This is liquidity resting, and this is also liquidity resting. So we don't know which side, which liquidity price is attacking, buy side or sell side. So we are still in the middle of all this, trying to figure out where price is going to go, just here from this candle. So this is what we are seeing right here. We have this candle closing below, very good. Here, if we see, let's just focus solely on this price action from. Let's ignore the bullish candle and look at only the bearish candles printing. So we have price rallying from the bullish, of course. Now the market opens bearish, very good, closes below. This candle closes below there, very well and good. Then we trade after closing down here. Now this candle at 1 failed to close below the candle at 1, failed to close at this low. Actually, this low is still valid, it's still intact. If I'm to mark this, I'll say this is liquidity. That just let me clone this. Let me synchronize it globally. So yes, this is the bearish. If I remove that, remove this, this, and this. Yeah. So we have still not yet closed below, but within this candle alone, we've had this candle and this closing. So this is bearish, shows us that we're bearish. Then we have this candle that we should expect to close below 4,800 to prove that it's bearish. Now we also want what we would also have loved this manipulation leg of this candle to be above all the way here. Now another reason why I think price is going to come back up to balance this price here, where we had our first initial entry, is that price has actually not returned all the way there. You see, from the time we didn't feel that inefficiency, we have not had price actually close in a valid manner below this swing low. So if this two candles had closed below here, that would have given us a very strong confirmation. And then again, when you look at the way the market, fell, when you look at this bullish candle and the way and how many candles it took to actually close below it. 1, 2, 3, 3 candles, which means even this high is our liquidity because there's no inefficiency within this range. There's no liquidity void. It's just wicks. This is all liquidity. This is all entries. They are trapping people who are selling, so that you keep thinking that the market is going lower. They are trapping you. You sell at that high, you sell, and you want to hold all the way down here. But no, this is what's going to happen. This is a minor retracement, and of course, yes, we might expect price to come back down to this volume imbalance, this gap, the market gap, or this fair value gap, also a possibility. But our the main intention of this move is to collect liquidity, because I believe this high here to here is liquidity. If we go to the daily chart, I don't know what we have there. It's actually today alone. today alone, and it's bearish. And we have come and tapped into this order block on the daily chart. So tomorrow might just continue higher, and as you see, the candles are actually very, they are not giving any sort of displacement compared to the previous price action. They're just ranging within each other. If you see, the same thing happened around here, around November, October, November of last year. We had the same kind of price action, price being choppy, and then out of the blue, one green candle just pushes price higher. So we are looking for sells currently, but having it at the back of our minds that we are still in a bullish market, and not just any bullish market, but very, very bullish market. Very clearly, we are very bullish. So this is what we are looking at. Yeah. Gold's consolidation. It's just, I mean, if a market that's meant to be moving aggressively, this is not something that really interests us. The middle line. Let me save this template actually. Save it as. I think I'll call it consolidation, accumulation, something. Call it accumulation. Is that the right spelling? Yeah, it is. Accumulation. There we go. So, yeah, it's our accumulation taking place. The 5-minute chart, it even looks ugly. Oh my god, see all this nonsense. Buy side liquidity. This is what I used to call a bullish flag pairing. You'd expect price to keep consolidating, then boom, out it goes. But yeah, oh, it already did it once. Yeah, boom, one, actually twice. Did it here, one, twice, one, bought, consolidated, bought, consolidated, bought, consolidated. So now, since we have a lot of liquidity here, please buy to our entry and fill us in. Do the needful. Sincerely speaking, this price action is making me feel like I'm going to trade the Asian session today. Yeah, feels like I'm going to actually catch a move during the Asian session and I'll have to trade it because I'm not seeing anything viable here as for the past 4 hours. You don't seem to be having anything valid doing. Yeah. Mm. I believe Asian session is most likely going to give us a good move. There's no hope. If there's no hope for now, because as you can see, price is just consolidating within the same area, within the same center. Yeah. The current 4 hour candle standing into a doji. We have an hour and a half to its closure. Sadly, see, I've placed sell limits waiting for price, waiting for price to actually fill me in. It's the same price action right here, as you see, but there's nothing going on really. Oof. I managed to pull one of my accounts out of drawdown last week. Now up about 1% on it with a single trade. I was down about 5%. Then I have another account that's up around 3%. Still in drawdown. Yeah, unfortunately, I started using this strategy that's more refined when I had already damaged every one of these accounts. So I have to fix what I have destroyed, unfortunately. Fortunately, maybe you can say. Yeah, fortunately. So set an alert in case I get filled in later on. I like the momentum that price is gold is trying to show us right now. Hopefully, it actually goes into our direction. Is there any news? Let me confirm. Any news this afternoon because it's already still morning, still PM session. The sentiment is completely bearish, very, 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 very bearish. But news-wise, okay, I think we are done. We are done with the news of the for the day. Fed Bostic has spoken. This, the last thing we had was around 11:50, if I'm not mistaken. 11:50 or 10:50. 11:50. I think it was 11:50. Yeah. So tomorrow, we have price index, Forex price index, GBP. Red folder, you have balance of trades for the euro and Michigan consumer sentiment for the US dollar. Okay, and then I don't trade Friday's New York session. Fortunately, that's not going to be any issue, any problem that I'm going to be part of, if there is a problem, that is. And then, if we are to look at Forex Factory, all right, we have. Today, President Trump has a speech today. Today. That is at. Let me change the timing. Yeah, today at 7 Eastern Time. At 7 Eastern Time. Trump has a speech. Okay, that could be one of the reasons why we are having a choppy market at the moment. Yeah, most likely. Yeah, so that's all. Then tomorrow, no NFP tomorrow. No NFP tomorrow. NFP has been moved to next week. NFP has been pushed to next week since we have a new Fed chair. Yeah. So on Wednesday, NFP is on Wednesday. Oof. Yeah, Wednesday, unemployment rate. Wednesday, February 11th, in the year 2026, we're having our second NFP of the year. I don't trade NFP, so Wednesday is going to be a serious week for me. Sorry, serious day for me to be out of the charts. So yeah, that's what we have for next week. All right. Let's see what gold has for us now. We have Trump speaking at 7 Eastern Time. Yeah, if there was anyone who bought from this low, this is a good buy. I was thinking about it, but I didn't see anything that aligns with my strategy here. Yeah, trading is boring, disappointing. I used to think it's fun to learn, but boring to execute because you have to wait most of the time, just like we are right now. Normally, I'll just put my order and go and do whatever I want to do. Maybe play video games or anything, take a walk, go for a jog. And then after, I just leave an alert there, get alerted that my trade has been activated. I go put other 2 alerts for my take profit so that I can move my stop accordingly based on my trading strategy. Now, I have a trading plan. I have to execute it all the time. My trading plan is simple. Look for where a price should, because how I studied this, I looked at the chart and I'm like, all right, all sessions, all sessions create highs in the market. Asian session will have a high and a low. New York session high and low. London session also a high and a low. So which of course there is something that stops them, that could be a PDRA or anything. So I studied when the timing of those highs and lows being formed, when they are formed, where they are formed, and particular price levels that they are formed on. So I use those price levels as a reference to where I put my entries depending on the session. Now, for instance, when London session opened, I know I'm bearish, but there's going to be manipulation taking place. I want to catch price when it's manipulating. So it's either going to offer in a fair value gap or an order block, but a particular one. There is a reason why I didn't mark out this one, why I marked out this order block, but as you can see, price just used it to accumulate here. This was just used as an accumulation stage. That order block, same way this order block is being used to accumulate. But this one is not really valid. It's just because there was a price level that I have marked out, the price overshot and then offered fairly later on and delivered, but incomplete delivery because liquidity was swept. So the algorithm already knew that it did an incomplete delivery at the bottom. So of course this market moves, doesn't forget, the market is perfect. It's meant to be perfect. It's meant to fill inefficiencies. It's meant to cover, to offer fair price to people who are buying and selling. And you ask yourself, where are fair prices offered to buyers and sellers? And I would say within fair value gaps. That's why it's called a fair value gap or an inefficiency, because the market has to fill it with your orders as traders. So price came up, consolidated back to how I came up with this area as my entry. So price delivered. Of course, around this time I'm having my morning routine and all. Then now 30 minutes to London session, I'm on the chart. I see this accumulation. I see by the time I came to the chart, price was still trading, I think around here. This was where price was, this area. Use this to mark it out instead. This is where price was, of course, right there. So price was within here. Now, when I was on the chart, I saw now price pushing higher and marked out this order block, because this is a valid order block, really very valid, and that's why you see price held through it and didn't go all the way to the fair value gap. Now I put my orders here and went on with my day and put a, so if I were filled in, I would just get an alert, come back, and I would be in this trade. This is what, because my stop is normally constant, 150 pips for my stop loss. So trading within would have wicked through, and I missed this entry to measure in terms of pips by 70 pips, and I would have been filled in if price just pushed 70 pips more. So that's what I waited for. So when I saw that price now was delivering, I just knew it wasn't coming back there anytime soon. So what happened? I thought of making a re-entry, because now during London session, price offered a fair value gap again, where we could have actually sold from. But this would be out of my trading plan right there, because I normally want to catch highs and lows. This should have been the trade, simple, and I'd have made something out of it, because I'm sure I'll take a 1 to 3 only during the session, 1 to 2. And then we use that area as to hold price, and as you can see, even the current order block failed to close above the one I marked out. So when I saw this, fell into close above and then price dropping immediately, I completely knew that okay, now that during the New York session we are bearish, there's no way, there's no fair value gap that price is going for up here. There's no fair value gap. The closest fair value gap has been filled during London session. If this fair value gap remained open, I would have still used it as an entry, but it was filled. So the next area of interest would be this swing high. This is actually liquidity, and then we have this area, which is when this price to stop going higher, we have another block, which the main threshold is our potential entry. So my setup for today is actually here. This is my setup for that day. And that's how I came up with this trading, these entries here. But if price doesn't actually fill me in there, well, I'm good. I wait for tomorrow and do the same analysis over and over again. Where are the text in red? Looks like we are going back to where we're meant to be. Yeah, we're back to the top of this consolidation. Let's see what's gonna happen. This is one of those days I just sit and watch the trade play out instead of just setting it and moving on. Just like that. Take it. 10 seconds to the closure of this 10-minute candle. It's exactly 11:49. Okay. All right. This candle activate me officially in the trade. Wow. That's volatile. One of my positions is out already. of my positions is out already. There we go. Officially stopped out of the trade. Knocked out, just like that. Yep. We'll be back tomorrow for London session. One missed entry, one lost trade. Guess I'll journal that then. All right, until tomorrow. No, Monday. I don't trade New York on Friday.